So in the previous recording, we looked at the different types of income that a company might have. So we looked at trading income, loan relationships, property, etc. So what we're going to do in the next section is now start to remind ourselves how to calculate these different types of income. So the majority of what we've got now, we have done before, but we've looked at it from an individual's perspective. We're doing just a bit of a revision really to remind ourselves how we used to do it and just seeing if there are any little bits and pieces that are slightly different when we apply it to a company. So the first one we had on the list there was trading income, and that starts over the page. So we did this back in booklet 1, and in fact what I'm going to do is I'm going to actually put a heading here to remind ourselves that that's exactly what we're doing here. So we're looking at trade income. So trade income, remember, is the income from your main business activity. So what we did in the previous booklet is that we took the profit in the accounts and we adjusted it, didn't we, by adding back what we call disallowable expenses. Okay, and in some cases we took out, I suppose you could call it disallowable income. So income that was in that profit that we didn't want to be there, and then we'd have a subtotal and finally deduct the capital allowances. And that would give us our trade income. So when we did this with an individual, what we did is we took that trade income and we put it into the non-savings income column and used the appropriate rates, etc. Okay, so that's the individual. Now, when we deal with it for a company, we basically go through exactly the same process. We pick up the profit in the accounts and we add back disallowed expenses, take out any income that we don't want there, deduct the capital allowances. But instead of putting it into the NSI, what we're going to do is we're going to put it into the corporation tax calculation. So this is what we saw on the previous page. So one of the items in there would be your trade income, and then you'd have your other income items like, I don't know, your property income, and you'd add them all together, and then that would tell you what is going to be taxable for the company. Okay, so the process is basically the same. What is different is how it gets taxed. So let's remind ourselves how we did this process here, how we did those adjustments to get to that trade income, and flag up any differences that we might have with a company. So the general rule we have is you only allow something if it's wholly and exclusively for trade purposes. So I'm going to write here, always disallow if it says the word non-trade. Right, so that's something that's not to do with the main business activity. So if you see that word in the question, that will be classed as one of these disallowables that we've got over here. Capital expenditure, we've seen that many times. Add back anything that's to do with an asset. Depreciation, profits or losses on the sale of an asset. And because all of this is going to be replaced with your capital allowance, isn't it? So you've got depreciation, that would be a disallowable expense. A loss would be a disallowable expense. A profit would be income, wouldn't it? So you've got to disallow it because the capital gets treated separately under the rules of capital allowances. And the reason for this is that depreciation is just too subjective. We also adjust for anything that says the word general. So general is a bit like your depreciation rule. It's very subjective. So if you did a general provision for, say, bad debts, one person might say 2%, somebody else might say 5%, and that would manipulate your profit. So anything we see the word general, then we want to adjust for. An increase would be an expense, so we're going to add it back, and a decrease would be income, so it would be a deduction. If you see anything that uses the word gift aid, and this is probably more common in a company, we've probably not seen these with individuals, a gift aid donation would be disallowed. Now you might be thinking, well, why is that the case? Because surely gift aid means I'm giving something to a charity. Well, you will get relief for it, but not under the heading of trade income. So it gets dealt with in a different section. So we will give relief, but for the purpose of trade income, donating to a charity is not part of your trading activities. It's something you've chosen to do, and therefore we're going to disallow. The rules for entertaining, same as an individual. Anything that's to do with entertaining really anybody apart from your staff must be disallowed. So entertaining staff is fine. They do say it must be reasonable, but you don't need to make that judgment in the exam. So anything, a gift to your staff, like a small present, or, you know, entertaining your staff, taking them out for lunch or whatever, fine. But if you see any other words, client, customers, suppliers, etc., then we want to disallow. Any gifts you give to customers, etc., must be disallowed unless it meets all of this criteria. So it has to be less than £50 each. It must have some sort of advertising for the company, like the logo, and it cannot be food, alcohol, or cigarettes. So it must have all three. If it does, then it's allowed. So the sort of gifts you're going to allow would be things like calendars, pens, you know, drinks, water bottles, that type of thing. With charitable and political donations, if it is a local charity, it's allowable, because the idea is it's promoting the business by some advertising in the local community. But if it's a national charity, then you would disallow. And you will always do that regardless of the size of the charity. And we never allow any sort of political donation. So bear that in mind, all right? Basically, anything to do with a charity now is disallowed unless it says the word local. Leasing to cars. So you might decide to lease your car rather than buy it, and we disallow 15% of the cost based on the emissions. So if it is a high emission car, which is anything above the 110 line, then that will be disallowed. Anything below, that's fine. So this is something that you'd normally put in the special rate pool if you were buying it. Obviously, we're not doing that because we're not buying it, we're leasing it. So you can claim 85% of the lease costs, but not 15%. Of course, this is to encourage businesses to lease more fuel efficient cars. Fines, we saw this with individuals. These are not allowed in general, so fines for you know, breaking some sort of law, health and safety law, etc., unless it is an employee fine, and that's normally for speeding. So if you agree to pay a fine for employees, let's say a salesman, then that would be allowed, but any other fine, the answer is no. Legal and professional fees allow anything that's really connected with the trade. So if you've got fees to, you know, maybe take an employee to court, or a customer that's not paying you or something like that, fees to pay the auditors, all allowable. But disallow anything that clearly says it's non-trade. And that would also include things like buying assets and issue shares. Anything to do with non-trade investments. So if it's a non-trade investment, this could be something like, I don't know, you've got an investment property that you rented out in addition to your trading activity. So if it's income, you're going to deduct it. And if it's an expense, you're going to add it back. So if you've got, say, a legal fee for a non-trade investment, that's a cost, so you're going to add it back. If you've got some rent received from an investment, then that would be income, and therefore deduct it. We will get some relief for it, but again, it comes in later. Private use, you shouldn't have to deal with this, all right? Private use only applies to individuals, and it only applies to an individual when it's the owner of the business that has the private use. So any private use that arises from any employee, including directors, is allowable. So you would just ignore that in the question and carry on as normal. So when you're doing your capital allowances, don't worry about separating any asset that mentions private use. It's just a distractor in the question.